All right, let's talk about something that's super common, totally human, but also incredibly costly. It's a little mental habit that could be quietly eating away at your wealth, and you probably don't even realize you're doing it.
Okay, think about this for a second. We all do this, right? We have our emergency fund here, our vacation fund over there, these nice, neat little piles. But what if that very organization, the thing that makes you feel financially responsible, is actually the thing that's costing you a fortune? So that's the big question we're diving into. Could a simple habit, one that feels so logical, so responsible, actually be the biggest thing holding you back from your financial goals? It's a wild thought, but stick with me.
Okay, so let's give this thing a name. It's time to really understand this mental trap that so many of us, myself included, can fall into. So here's the official term, mental accounting. And yeah, it's a cognitive bias, which is just a fancy way of saying our brains are kind of hardwired to do this even when it makes zero logical sense. We give our money different jobs, and we totally forget that at the end of the day, a rupee is a rupee. Every single one has the exact same power.
You know, the best way to picture it is like this. We create these little buckets or silos in our heads. This is the rent bucket, this is the fun money bucket, and this one over here is the super serious emergency bucket. And it feels good, right? It feels organized. But here's the catch. The walls between those buckets, they're totally imaginary.
Let me give you a classic example. Let's say you get a bonus from work. What do you call it? Fun money, right? So you stick it in a savings account that's barely earning anything, earmarking it for a new gadget or a trip. At the same time, your serious money, your salary, is over here in a mutual fund, hopefully earning a much better return. See the disconnect? Why the different treatment? It's all your money. That separation is mental accounting, plain and simple.
And hey, this isn't some made-up pop psychology thing. This idea is the real deal. It comes from the work of a Nobel laureate, Daniel Kahneman, one of the giants of behavioral science. It's a proven, well-documented glitch in how we all make decisions. Okay, so we know what it is, but what's the big deal? What's the actual damage here? Because while it might feel harmless, this little mental habit has a real, measurable cost. And it's probably bigger than you think.
Get this, 65%. That's a huge number. According to some behavioral studies out of India, that's how many people are doing this, irrationally separating their money. You know, using a surprise windfall on something fun instead of, say, wiping out high-interest credit card debt. So if you do this, you're definitely not alone. But it's time to be smarter than the crowd.
And that right there is the heart of the problem. When your money is locked up in these mental silos, you can't put it to work where it's needed most, and that creates what's called a massive opportunity cost. That's just a fancy term for all the growth, all the money you could have made but didn't.
Okay, let's look at the cold, hard math because it doesn't lie. Imagine you've got a travel fund, and you're feeling pretty good about it earning, let's say, 4%. But at the same time, you've got some credit card debt over here that's costing you 12% in interest. You might think you're earning 4%, but you're not. You are actively losing 8% on that money. It's a guaranteed loss, all because of that imaginary wall between savings and debt. Let's make this even more real. Let's use a number from the source material. Say you get a 50,000 rupee bonus. You stick it in that 4% travel fund, instead of using it to pay down a 12% loan. You know what happens? Over just 5 years, you've effectively lost 30,000 rupees in compounding. That's a whole other vacation right there, gone, just because of a brain glitch. Now, zoom out and think about this over your whole life. If you keep making these kinds of siloed decisions again and again, it can slash your entire portfolio's growth by a massive 5 to 10%. We're talking about life-changing amounts of money. Just poof, gone, left on the table. Okay, that was a little doom and gloom, I know. But here's the good news. The fix for this, it's actually really, really simple. It's not about complex spreadsheets, it's about changing your perspective. And it all comes down to one core idea, the unified view. The goal is to train your brain to stop seeing separate buckets and instead see all of your money, your salary, that bonus, a tax refund, all of it as one single powerful resource.
So how do you actually do it? It's a simple 3-step process. 1, all your extra money, your surplus, goes into one big pool. No more labels like fun money or car money. 2, you decide where that money goes based on your real financial priorities. And let's be honest, that usually means killing high interest debt first. And 3, you start tracking your total net worth, not the balances in a bunch of different accounts. That forces you to always see the big picture.
And just keep this one simple truth in your head. A rupee is a rupee is a rupee.
The one you got from a tax refund has the exact same power to grow as the one from your paycheck. The second you truly get that, I mean really internalize it, those mental walls just start to fall apart.
All right, so now the ball is in your court. This is your challenge. It's time to do a little audit, not of your taxes, but of your own thinking and your own bank accounts.
And you have to be honest with yourself here. When you get a bonus or a tax refund, does it feel different? Does it feel like play money? And if it does, just take a second and ask yourself, why? It's your money. You worked for it. It deserves to be put to work just as hard as every other rupee you have. Think about the labels you use. Are there certain funds that are sacred and can never be touched? Is other money fun money that you can blow without a second thought? Those little labels we stick on our money, they're more powerful than you think, and they might just be what's stopping you from making the smartest move.
And here's the final gut check. Go on, do the math. Pull up your savings account interest rate. Now pull up the interest rate on your credit card or any loans you have. Just look at the two numbers side by side. Are you winning or losing that game? Seeing that in black and white might be all the motivation you need.
Look, this is about more than just shuffling numbers around to optimize your finances. This is about recognizing a quirk in your own brain and taking back control. It's about making clear, rational decisions that your future self will thank you for.
Because that is the ultimate goal, right? To have all of your money working together as one powerful force building your future. Stop letting one hand fight the other. Unite your money and let it do what it does best. Grow. Thanks so much for tuning in.